Well, hello everyone. This is Sue with your latest video from the girls and me at Diamond Mortgage. In my last video, I addressed questions that were sent in by viewers pertaining to the mortgage process, whether buying a home or refinancing their current home. We always encourage our viewers to send in topics to discuss or questions on any specific aspect of the mortgage process. The response has been great, and this week I want to take the time to address a few more of those questions. The first question is, do I need to pay any money up front at the time of application? Good question. When you come in to get pre-qualified, it will cost you absolutely nothing at Diamond Mortgage. We review programs, your credit, and closing costs associated with the product that best suits you. Once you either have a contract on your home to purchase or you are ready to refinance the house you currently own, you will be required to pay for the appraisal. That is the only upfront out-of-pocket expense associated with your mortgage. The next question is, and a very popular one, is how long does it take to get a mortgage? Well, that can vary a bit depending on what type of mortgage that you are applying for. Typically, it should not take you longer than 45 days to purchase or refinance your home. However, some mortgages may take a little longer, specifically a CHFA or USDA loan, as it adds an extra step in the approval process. With those loans, we generally look to close within 60 days. Our next question that came in was, is it okay to buy a new car or furniture during the mortgage process? We discourage that if at all possible. If it is absolutely necessary that you need to obtain new credit, we ask that you always contact us first so that we can help you determine that obtaining new credit will not negatively affect your mortgage. Another good question that came in is, what are points? A point is equal to 1% of your mortgage amount. We can offer you a lower interest rate if you decide to pay points. Basically, points are used to buy down your interest rate. For example, on a loan amount of $100,000, we can offer you a lower rate if you pay 1 point or $1,000. That $1,000 is then added to your total cost to be paid at closing. Speaking of closing costs, another question that came in is, what is the difference between closing costs and prepaid items? Closing costs are those fees paid to a third party for services being done on your behalf, such as the appraisal fee, attorney fee, title insurance, and recording fees. The prepaid items consist of costs that you need to pay regardless if you have a mortgage on the property or not, such as your property taxes and homeowners insurance. Those are just some of the additional questions that came in, and we will continue to answer any questions you may have. I want to thank those viewers who have sent them to us and keep them coming. Thanks so much for watching and for your continued support, and we'll see you in the next video.